Let's go. Okay, guys. Good morning to you guys once again. 30th of April, 2025. CRAZII Market Talk with KEL. All right. So before we start, disclaimer apply as usual. Yes, I'm just back last night. Oh, very tired. Trust me. So it's like flying everywhere. And next week again, I'll be flying off to China. All right. So we are going to moving crazy to everywhere, and I hope that all of you can benefit from this very very soon. Yeah. Okay, before we go into the market, let's look at something very different. Okay, let's take a look right now. Okay, so this is the US 10-year bonds, yeah? This is the TLT. Now, I want to show this with you because I was sharing an MO video, even I was over in this Cambodia. I still did my MAO video, and let me share this with you. Let me get my stuff in. Okay, wait, that's my annotate. Okay, so you can see on this particular day, the bond price hit 94, and then the next day it tumbled, right? And went all the way to 85. Okay, and that was where the Dow Jones pulled back a little bit. Now you look at the volume traded was huge, right? The biggest and largest. Then now we have a interim rebound, but the volume itself is nowhere near the volume that we saw on that day. So it's very simple. As long as the bond price continue to fall and go up, sorry, if the bond price continue to go higher, then yes, the stock market will continue to rise, okay? Because that is the one that everybody is talking about. But if the bond price do pull back and pull back to 85, and if the volume actually increase, then we may have a big issue with the stock market. So watch this bond price very, very closely right now. Now, of course, you may say, well, KEL, the 10-year yield is doing okay. The 10-year is coming down. You can see the yield went up to a high of 4.6 that time, and that was where the bond price basically came down. And then after that, you see the yield come back down very nicely. So there shouldn't be any reason to panic. Well, based on this chart itself, it seems to be like that. So yes, indeed. But then if you look at the midpoint of this guy, we're somewhere near here. It's 4.18. Okay, so let's hope all these ones stay good. Okay, everything okay. Then if the yield actually goes up, then the bond price will actually come off. Okay, so the bond yield and the bond price, they go inverse direction. Now, yesterday when I was doing my MAO video, someone asked me this question regarding about the moving average and why I quoted 36,650. So I was like, wow, so far away from where we are right now. It's at 4,000 point. So they said that, is it because I want to get attention? No, let me share this with you with more detail. Yeah, let me show this chart now. Now, this is the Dow Jones chart with the SMA moving average, right? SMA 200 moving average. So since 1995, okay, 1995 all the way to 2025. So how many years is that? That is total 30 years history. 30 years, yeah? Now, I just want to show you this is that you look at it, whenever the market is in a bull market movement, no problem. The market will be supported by the MA30, MA 200. But when there's a pullback itself, right, you notice the market will use the MA as a form of support and later as a resistance, then as a support. Can you see that? And then as a support. And then after that, it pulls back down, it goes up, and then become a resistance. Then after that, resistance only when it breaks above it, then it become a support. All clear under now? If all clear, press number 1 right now. Okay, so this one is from year 1995 all the way, we stretch till 2011. Okay. Okay, so now we expand the view a little bit more so that to take too much of our time. Okay, I put it up a bit bigger. Okay, so just now we start at 2011, yeah? Okay, let's make it bigger a little bit. Okay, so everyone take a look. Did the market take it as a form of resistance? Yes. Okay, I just change my arrow a little bit better for you. So resistance, then become support, then become support, then become support. Then all the way go, okay? So typical, right? And then when it pulls back, you see support, and support. So this MA 200, very good, very useful. All right, very good. At least can move 1,000, 2,000 point if you actually follow through. Okay, so that is the base period from 2009 to 2016. So we have the Lehman crisis all the way. We stretched till about 7 to 8 years later. Yeah. Okay. Now we clear the screen, and then we now move to the current. Okay. Now what you see. So based on that understanding, we saw the very interesting part, whereby the market as as a support right here in 2016, then it went all the way bull. That's good, but when it pulls back, it goes really for the MA. Can you see? Okay. Then of course the market was during COVID period. The market broke down to 18,000. I understand that. So if we use the same theory, if the market is to rebound, it will rebound back to the moving average. Yes, we've seen it before, right? So the market peers below it. When it rebound, look at it, it rebound exactly to the moving average. So which means when the market was here, example, and you choose to buy, you should only sell if the market go back to the moving average. So which means that back then, when it's, let's say here was at 18,500, for some reason you purchased the market, and then after that the market go up, right? Until here, then you sell, no, that's 23,500. Wow. So imagine if you hold a 18,500 contract, you hold it to 23,500 during the COVID worst period. My God, that's how much? That's a 5,000 point rally. Yeah, 5,000 point. Oh my goodness, one contract worth $50,000. That is how crazy you can go if you really have a opportunity there. Okay, then after that, the market ding dong, ding dong, ding dong for 4 days, right? Then we start to lift above the MA, boom, the bull goes in. Okay, so you got an idea now? Okay, now let's stretch again. So we had a very big bull all the way from all the way here. As long as the market is strength, is short strength, just keep on buying. Now this is where it happens. The market pulls back, right? Okay, now the highest point was say 7,000 in year 2022, and it pulled back, and then it stays below. The next day recover. Okay, understand. So it's very simple to use this MA30, MA200. Yeah. Okay, so now 2022, we have talked about it. We stretch again, and you can see it misses the MA30, MA200. Okay, and then it goes up again. Very nice, very bullish. And then this is what happened in 2025. Now watch this, guys. The market came down, but it didn't touch that level. It didn't, and now it recovered. So the simple maths is this: if the market goes up, no problem, right? No problem, can buy, yeah. But if it comes down, I can tell you safely, we will meet somewhere around 36,650 zone. All right, all clear? It's as simple as that. We are using the last 30 years chart history to come up with a simple analogy. If go up, may break high. If come down, 36.5. All clear? If all clear, press number 2 right now. Now, don't ask me this question, KEL. When will it happen? Wow, if I know which day, which month, I'll tell you this. I will be the richest man on earth. Okay, I won't know. All right, I don't know. Is there any like indication of sort? No, have lah. I mean, the thing is this: it must be a very, very catastrophic event. Something very terrible must have happened. Then you can see this. Back then, it's all right. I was really aiming at this number. You know, trust me. When the Dow was coming down, I was really aiming for this, and the market missed it by just 500 points. Ah, what a waste. Imagine that if it happens itself, well, I'll catch at least a 1 or 2, 3,000 point rally. Oh, what a waste, what a waste, what a waste. Okay, got it? All right, so guys, this is what I want to share with you. Now, the thing is this: despite the market going up so much recently, right? Look at the fear and greed index is still trading at fear level. Very interesting. And you can look at this itself. The market momentum itself is still below the average itself, so it's not a very good sign. Although the market speculate that it may go back to the MA, but I say again, it's all possible. All right, this is 125-day MA. Now the stock strength you see is very, very weak at the moment, nowhere near what we are seeing. And the stock breadth itself has recovered because of the G7, the significant 7. And then the put call option itself, you can see that the market is now back to what they call the middle part. So there's no really bull, really bear. And then the market volatility has pulled back significantly. I told you short the VIX, right? So we are now back to near the trending area. So maybe we can look at it, because the last time, if you look at it carefully, when the thing break out, the market touched the MA and then it shoot up, right? Okay, so now it pulls back, and now with the MA level, so we may actually see some volatility coming in these few days. But of course, you may say, well, KEL, next few days, everything's all good. We have the 100 days of the president. We have the say saying that there's going to be a good chance that India might be settling in. You know, all these things now, we can just take observation and reference point. All right. Now the safe haven in terms of the stock and bond, we are actually near the 0 level, so no difference. And the last one, the junk bond demand is at the low end, so okay, all is good. So from all this thing itself, I'm just saying that okay, we trade according to plan. If the market wants to go up or down, we just follow through. So now look at the chart for today. Now, today's Dow Jones chart is very simple to understand. The opening price itself is at 40,573.9, and the MLP is 4039, the 40390. Now, the thing is this, now we are approaching MLP. Now, you look at the past experience, every time the market takes the MLP pretty serious, as long as the market stays above MLP, the market will buy. And with the KSI green color, it's obviously no reason to sell. KCX is also black color, so again, no reason to sell. But yet this morning, the market already come down already. So not too sure, is it profit taking or not? But one thing to note is that we have a 4 diamond here. So everybody take down this number. This number is very important. That's 40,126. 40,126. This is the white line that you're supposed to draw on the Dow Jones. And if you look at the low of yesterday, yesterday low was 40,153. So yesterday's low missed the target by 30 points and then rally up, right? But today the market coughed back everything. Now it's very simple mathematics here. Is that if the market really breaks the MLP later, if it breaks for whatever reason, it will likely compensate and cover the KCB. The KCB will be 40,192. So it's actually quite near to the the diamond level. Yeah. So 40,192. Now I don't know, and I don't think that the market will sell unless there's something that we don't know. So I've been checking on the news, but you can see the low indeed is significantly getting a bit lower, but KSI is still green. So all is still good. Okay. All right, so today, if you have shorted the Dow Jones this morning with me, we are probably gonna make some money soon. The low, we're supposed to aim at this 40,422, right? That's a KTR minus one, yeah. Okay, so that is the Dow Jones. All clear? If all clear, press number 3. So as long as the market stays below OP, you just stick to the seller. If market's above OP, stick to the buyer. This is the crazy number 1 rule. Nothing else will change. Even they put pivot inside here, the pivot also must listen to the OP, right? There's no other way out. Okay, all right. Then let's go at gold right now. Now, someone asked me this question this morning. How come gold again got no pivot here? Is it because spoiled already? Ayo, I am the creator of the pivots. I know, not creator, sorry. I'm the one who passed the message of the pivot, okay? Right, of course, I know today got no pivot. Yes, definitely don't have. This arrangement will not have pivot. So what does it mean? That means that the OP will be the main source of direction. If the market stays above OP, you buy. Below OP, you sell. So yesterday, you remember, I told you, right, no pivot yesterday. So no pivot yesterday, then you should trade with the OP. So yesterday when the market opens and trade below OP, right, I told you don't buy, right? I've been very, very vocal on this, don't buy. All right, then the price came down. All right, but of course you'll say, KL, but the KSI is green. Yeah, correct. So you notice the market, the low got tail one because the market will have people bottom pick. But since the market is below OP today, plus now it's below MLP, right? Then do yourself a favor, don't long yet. Okay, today cannot long. Or don't long can or not. Yeah? Just today don't long, let the market come down first. Now there's a very powerful KCL line over there, right? Which is this one here, right? Okay, 1, 2, 3, 4, 5. Yeah, correct. Okay, so you can see this. This is the KCL. Okay, all right, KCL level here because this is the CCYR KSI red, and you can see the next day, the next day, the next day. Oh my God, look at the way it touches the KCL level and rebound. So what number is this? 3288, right? Yeah. 3288, correct. This level very strong. So if anyone to buy gold, you can see whether can it hover around there. Now there were 2 instances where gold basically touched 3288, right? Went lower, right? Now the low it went was very identical. It went down to 3265. These two level went on to 3265. So what the market did was 3288 is a KCL. The market bears go down by another $23, then rebound. So not easy, no, not easy trade itself. So you must watch out for that, yeah. Okay, why got no KCL? Let me see, yeah. Yeah, correct. 1, 2, 3, 4, 5. Today the 5th day, yeah. Wait, sorry. Okay. Yeah, so don't have today 5th day already. So don't have the level coming up. Yeah. Okay, can all clear? If all clear, press number 4 right now. Now, someone actually texted me, Kel, how come yesterday the market talk so short? Yesterday, internet was very bad. Yesterday, you all know, right? The internet was so bad. It was keep on dropping. So that's why we didn't talk too much yesterday. Yeah. Wow. Okay, talk little is a problem. Okay, okay. Now, next market I want to see is Bitcoin. Why I bring Bitcoin to the picture? Because Bitcoin today has a very interesting pattern. What is that? It is the inverse pivots. Okay, inverse pivot means that if the market opens within, then usually the market will go sideways. But if it breaks below the pivot one, example in this case, it will come down. And interesting to note that is the three of them are already red. So by default itself, this guy is a target. It's an elephant trade, a small little elephant. So if that happened, then the Bitcoin may have to come down to 92,700. So this is 92,700 area. So if the market do pull back, we may see down. Of course, Bitcoin comes off, usually the stock market will also come off, right? So there's something to watch out for. 92,700 on that. Now, do note that the MA 200 and MA 30 is on top of it itself. Hey, how come the MA 200 can be on top one? Can, of course, why not possible? So that means the long term and short term itself is very bullish for Bitcoin. So on vice versa note, if the market actually breaks down, and once it breaks below the MA 200 instead, the selling will be very drastic. So remind yourself, yeah, if Bitcoin actually breaks down and break below MA 200, the selling can be drastic. So it will be my free fall all the way to 83, 87,000. It is possible. Okay, so the MA 200 is above MA 30. So the long-term support is higher than the short-term support. So if the long-term support break first, the bookmakers, the algorithms will kick on and kick in and sell even stronger. Yeah, all clear? If all clear, press number 5 right now. Okay, so the next thing is I want to talk about is Euro. Euro has also a very interesting formula. It has a inverse pivot also today. So today got a lot of inverse pivots, yeah. Okay, so now the KSI has been green for the many days, but the price is not moving up. I like this kind of movement because that means that this is an elephant trade in the making, and if it really goes up itself, right, this elephant trade will be very rewarding. So to me is that if let's say the euro is going to go up, right, that means the dollar will have to have to weaken. If the dollar to weaken itself, right, then what naturally happens, then obviously itself gold will go up, lor. Yeah. So that's why I will rather the thing to wait for a while, wait for a good opportunity, and then when you break out only, the target is pretty clear. So now it's 1.1367. So this target here is just 1.1570. So it's quite a bit of, it's about 200 pips profit now. So if you can actually utilize it well itself, it's 200 profit for everybody. Yeah, pretty good, pretty decent. Okay, all right. Last one will be Canadian, right? Since Iman, you want to do Canadian. So Canadian is also like the same thing, has been sideways for many days. We do have a diamond at the bottom. So which means that if the market want to go up, right, it has to break above the diamond closing price, and that will be about 1.13878 level, yeah. So it has to go up. So of same thing as in if the dollar weaken, then of course we can have this movement in coming in there. Right, dollar yen. Yeah, so dollar yen, no, sorry. Yeah, dollar yen, correct. So watch out for this. Okay. If it had to go past this 1.38, then it will go up. If not, it's now we're gonna hang here for a while. Okay. All right, guys, that will be all for this morning market talk session. We'll take a short break and then do a review or something else for today. Thank you very much.